Good morning, everybody. It is July 4th. I'm here to do a market update for you. So step one, I'm just going to give you the facts of what's happening in the marketplace. And then step two, we'll do a quick analysis. All right, so let's jump right into it. And let's start with inventory. So what's currently on the market? So currently on the market, we have 292 properties for sale, residential properties for sale for consumers. And that is above our 5-year average, 278. So that's a recent development where we have more inventory than our averages. And you'll see that right over here in a bit. So 292, 278. So what's that comprised of? Well, single families are making up 149 of it. So we're still below our 5-year average for singles. Semis are 16 of the 292, which is just on par with our 5-year average. Towns, we have 65, so quite a few more towns on the market than typical, and 62 condos. With all the recent condo developments that we've had, it's not surprising that condos are coming to the market first, and there's a lot of condos on the market above our 5-year average. So 62 condos for sale right now. So based on where we were last year, we have 292 properties on the market right now, and last year at this time we had 134 properties. So that represents a 118% increase year over year. So we have over double the amount of inventory than we did last year, which is not a bad thing because inventory last year was decimated. So we'll get into analysis later. I'll stop myself from doing analysis halfway through here. All right, perfect. So here we go. Let's see what's happening coming into the market. So this is the amount of supply coming to the marketplace. So the more supply we have, if we have a certain amount of demand, if we get a ton of supply and the demand doesn't increase with that, then we're going to get more inventory, and then that's going to be typical for prices to drop. So as you can see here, in April, we had 422 homes come to the market. In May, we had 415, and in June, we had 369. So we were on pace to break 400 in June, but we didn't. So I just have the notes here of what happened to our inflows. So we were averaging about 14.4 homes a day in June. So that would have broke 400 if we kept that pace. But we ended with 12.3 homes coming to the market. So yeah, as the second half of June happened, the homes coming to the market started to decline. And you can see here on this screen here, there's the 12.3 homes flowing to the market every single day. And that is about 12% more than our 5-year average. So it's not a crazy amount more than our 5-year average. It's only 13% more over our last year's time. So last year we brought 324 units to the market. This month we brought 369, and the 5-year average is 331. So pretty solid inflow. Nothing too crazy there. It was nice to see it come down from its peaks a little bit because we were getting a little bit heavy on the inventory. The listing outflow. So here's my notes on listing outflow. We were averaging 6.1 homes sold a day, which was 34% lower than 2021 and 23% lower than our 5-year average. So our sold inventory, the amount of units we were selling was decimated. It was not happening. We were essentially grinding sales to a halt here. However, the second half of the month, we saw even more homes. We saw even less homes coming to the market here. So selling the market. So we actually ended at 5.9. So it even got slower in the second half. So it was 6.1, and then it ended up at 5.9 homes sold every single day. So that is 26% lower than our 5-year average, and almost 37% lower than our last year. Last year was definitely we had a ton of sales last year. I mean, we were setting records in every single month. We had probably one of the most heaviest outflows last year. So yeah, when people are talking about the market, these headline numbers seem scary, right? 36% down, 26% down. But in my analysis, I'll show you a little later. It's just the market trying to find itself after some significant changes that happened in April. So the market is changing. People are, the government's raising interest rates. There's recession fears, all this stuff. So this is really slowing the market down in terms of sales. So people are still bringing their houses to market, but the sales have really stopped because people are just trying to figure out, hey, what's going on? Let's catch our breath here. And I think this is a perfectly healthy, good thing to happen, just so the market kind of resets, figures itself out, and then carries on forward. And I'm predicting that July is going to be a different month than the last 2 months because I feel like the market has kind of figured itself out now a little bit. And I'll show you why I think that in a bit. All right, so let's go to failed listings. So this one was a crazy stat. 173 failed sales in the month of June. That's the highest amount of failed sales we've ever had since I've been tracking here. And the reason I say this is because the market was saturated with fake sellers, right? People that are putting their house on the market. They didn't get the price they wanted, so they take it down and then they put it back up on a new price. Didn't get it again, take it down, put it back up. So that when someone engages in an activity where they take the listing down and put it back up multiple times, that's going to dramatically increase the amount of failed sales, and it's going to over exaggerate the amount of inventory coming to the market, because essentially that same home has come to the market 2 to 3 times. So when multiple homes are recycling themselves over and over again, you're going to have this dramatic increase in failed sales while also having a dramatic spike in listings coming to the market, which is what we saw with the 400 plus with homes coming to market over 400 units per month for almost 3 months straight. So yeah, it's pretty interesting development, because back in the day, when it took like 40 to 60 days to sell a property, people weren't engaging in that practice of taking down, putting back up, taking down, putting back up. You know, if homes weren't selling in 10 days here in this market, people are taking them down, putting it back up. So it's just a different time, and it's just that stat is just it's a little bit overwhelming. But anyways, that's kind of good to know. So 173 failed sales. So we're 103% higher than our 5-year average, and almost 100% higher than our last year at this time. And as you can see, since essentially March, you know, we've had 100% plus failed sales stats, right? So these stats are just, you know, failing to sell homes are just coming off the market, back on the market. So let's see what's happened to our average days on market. So in the month of June, as you can see here, we were at 8 days on market in January, and now we're all the way up to 16. So every single month we're adding a couple days average days on market, which is perfectly fine and perfectly healthy. This is getting more balanced now, which is nice. Sold listing, list price to sale price ratio. Wow, for the very first time in quite a bit, I think it was back here. Yeah, it looks like in 2020 we were underneath 100% list price to sale price ratio. So for the first time in a long time, we were under 100% list price to sale price ratio. So essentially, if the listing was asking for $100,000, the sale price was coming in at $98,000, where typically, like for example, back in February, if the list price was $100,000, the sale price is about $120,000. So there is a shift in the market happening right now, as you can see here, and it's been gradually declining, as you can see. All right, so this is the big one, the monthly average sale price here. So as you can see, in April, we topped up at $1 million, and now we're at end of June at $840,000. So it's about a 16.5% decrease from the peak to where we are now. And back in 2017, which is what I compared a lot this year to, we were at 562 at the peak, and then we hit the bottom in August, which is roughly around 18%. So the reason I think July is going to be an interesting month is like, is this the month where we're going to flatten, or are we going to go past the 18% that we did in 2017? Are we going to see strength in the market again? And now that the fake sellers have been weeded out of the market, do we now actually have sellers on the market that are serious about selling? And if that's the case, where all the fake sellers got eliminated, you know, with all these failed sales that we've had in the last little while, do we now have real sellers in the marketplace that are going to actually find a buyer, and the buyer and the seller is going to meet and actually make a sale? So July is going to be interesting to see if that's when the shift actually happens here, because we did have a dramatic drop, 16%, because in 2017 the market only dipped 10% in that same time frame from peak to the end of June. So it's almost double the rate of dropping here, and I don't see that continuing to continue accelerating down. I think we're going to kind of like have a smooth bottom. It might go down a little bit more, so time will tell. Interested to see what happens here. So as you can see, we are 11% down in May from April, 6% down from June from May, and then year over year though, interesting, because the headlines will always say that the real estate market is crashing, we're down 20%, et cetera, et cetera, et cetera. When in reality is, yeah, month over month we are definitely declining. However, year over year, we were at a $727,000 average sale price in Guelph last year at this time, and we're still at 840, which is still 15% year over year increase, which is still phenomenal. Nothing to be ashamed of there. And I just think the market is finding itself because we had this huge gap. If you just look at this is January in 2 years ago, 523,000, and here we are, January, almost at $1 million, almost doubling in that 2 year span, which is insane. And now you can kind of see the average monthly sale price coming down. Still crazy growth. I mean, 5% is still great growth in a real estate market, and these are well above those rates. Like I said, this is 15% here, but as you can see, we're starting to come in and compress a little bit, which I think is healthy for the market at this point. I couldn't keep going the way it was going. It was pretty crazy. So that's there. Again, if you have any questions at all, feel free to DM us. So quarterly, it's not as dramatic in the quarter. The reason I like doing quarterly is because there's more units of data. So for example, in the month of June, there was 176 sales. So when you average 176 sales together, the numbers are going to be different if you average, 800 sales together over the quarter. So it gives you a bit of a bigger data set to give you a little bit more accurate information. So Q1, we ended at $970,000 average sale price. Q2, we ended at 918. So quarter over quarter, we changed 31% from Q1 2021 to Q2 2022. That was a 31% growth, which is insane. And as you can still see here, we still are 21% up from last year when you just look at the quarter over quarter numbers. So still a very strong market. People aren't, it's nothing to be worried about at the current moment. So that's that information. And here's the year over year, just to show you kind of where we're at here. List price to sale price ratio. So we're at 103% in the quarter. So we're still above 100%. It was just on the monthly we declined to under 100, but the quarter still ended very strong. The units were definitely lower though. We sold not many units. So the only time we sold less units was in 2020, and that was pretty much peak COVID. So when the pandemic was first happening, that's when we had almost no sales in the second quarter of 2020. And so we were pretty light. It was a pretty light month of sales, but we had 2 months back to back that were quite below, significantly below the 5 year averages in the last years. So again, it's just my analysis that the market's finding itself. And I'll show you some interesting stuff now that we can do some analysis. So if you have any questions at all, feel free to reach out to us and we'll go from there. And just give you the total year. So far, all the home sales combined averaged out, we're looking at $946,000. So we're taking every single home that's sold so far, so January to June, a $946,000 average sale price, which is still which is 23% higher than last year. So last year we ended up at 764,000. So hopefully you found that interesting. Just to do a little analysis here, I wanted to show you this graph here. So as you can see here, this is the total amount of inventory coming into the market is represented by green, and the red is the total amount of homes flowing out of the market, so sold or failed sales. As you can see, we've had a healthy gap between inflow and outflow, which is why the inventory has been starting to accumulate. See, as you can see here in January, we had very low inventory, not even close to our 5 year average, and the inventories were still decimated and demand was still super high, and we just couldn't bring homes fast enough to the market, and they were getting consumed. So this is with the hottest part of the market right here in this year. And then this is where things started to dramatically cool off with the interest rate increases. And as you can see with those changes and the inventory coming to market and the outflow kind of stagnating, we were actually starting to recuperate the inventory that we've lost, which is nice to see that we actually have options now. Buyers have options. It's not as crazy hot seller's market. It is more balanced now. So as you can see, the inventory, the gray lines here, the first one is what the current inventory is. The dark gray is the average. And as you can see, the light gray started catching up and now exceeding the dark gray. Here, the two colors here, orange is actual units sold and blue is failed sales. So this is what I say, anyone was able to put their house on the market back here and would probably sell because the demand was so crazy. And now that those opportunities are gone, I say these quote unquote fake sellers, now they're not getting these astronomical prices, so they're just not selling. So they're just coming off the market. And as you can see, we have a huge spike right here of failed sales versus actual sales. And you can see right here that failed sales almost was exactly the same amount as sold homes, which is pretty wild that almost more homes failed to sell than actually sold in June. So that's why I think the market's really figuring itself out here. This is not going to maintain itself as a typical standard here. I really don't think that next month we're going to see failed sales up here and actual sales down here. I think it's going to start separating a little bit where the market's going to be made up mostly of actual solds, and the failed sales will likely come down. That's my guess here. So this is where we're sitting for the year. We've had 2,119 homes coming into the market. We've had 1,239 homes leaving the market in terms of sold. We've had 570 failed sales. So we've added 310 units to the marketplace this year so far. And over a 5-year average, usually we add around this time of the year, we're usually around 192 homes positive in the marketplace. And last year we added around 105. So we're almost 60 to 200% increase of actual bringing units of inventory to the marketplace. Which is great because usually you'll see at the end in my other comparison that the end of the year is usually when you see all the inventory leaving the marketplace. So today we have 292 homes on the market. We're expecting another 369 homes coming to the market next month, with if the average of 12.3 homes per day is coming to the market maintains itself. So that's going to give the customers that are buying real estate about 661 homes to choose from. If we take the sold rate of 5.9 homes, we're going to about see 176 homes leaving the market, which means there will be about 485 homes left on the market. That means if the sold rate continues at its current pace, in about 2.76 months, all the inventory would be gone if no new inventory came to the market. This is called absorption rate. And when you're close to around 3, you're around a balanced market. So we're pretty balanced right now. I took out the outflow rate because are we actually going to have 485 homes? I don't think so, because the failed sale rate, as you saw, was about another 6 homes per day. So if we actually consume 12 homes here with sales and outflow, the actual real inventory for consumers to buy is 0.84. But I think there's going to be a shift where there's going to be less failed sales. So that's why I took the failed sale number out here, and I just did it on the sold rate. So it looks like we're in a balanced market as long as these other properties just don't keep flying off the shelf in terms of failed sales. Okay, cool. The last thing I want to show here is kind of this graph here. And the reason I want to show you is because these are all the different years we've had: 2017, 2018, 2019, and here's 2021. I just want to show you these, usually around October to December, you can see outflow is significantly higher than inflow. And that's pretty typical for every single year, outflow, inflow. Outflow is always much higher than inflow in the last 3 months of the year. And you can see that for almost every single year. Boom, here again, right? And this is going to be the same for here. So, it's going to be interesting. We have an excess of inventory right now, but usually that bulk of inventory that comes into the market at the springtime will evaporate by the end of the year. And another interesting thing to know is when you look at a more balanced market like 2019 was, you can see failed sales. There was always failed sales in the market. It's not ever zero. It was only 2021 when we had almost no failed sales because 2021 was one of the hottest markets we've ever seen. And obviously going into the first 2 months of 2022, there was almost no failed sales, and almost all this red stuff here, this red line, this is a combination of failed sales and actual solds. And as you can see, in the first 2 months, it was all solds. Like, there was hardly any failed sales. And in 21 here, you can see that most of the red was made up of the yellow, which is solds. And this right here, the blue, is the faileds, right? So hardly any faileds, almost all solds. And as you can see, as the years started progressing here, we had less solds and more faileds. But it was still such a hot market that the demand was very high constantly. Here, another balanced market, you can see, here's 200 units sold, here's 100. So we're typically on average around 150 units sold mark. Even in 2017, pretty much the same thing, around 150 solds pretty constantly. So demand in the Guelph real estate market, no matter what happens, is pretty constant. It's just really depending on how many pieces of inventory in the market and how many are not in the market. Is there macroeconomic changes or not? And right now we're going through some interesting times, and that's why I think, the demand, the home sales will still be there. The real estate market in Guelph will be fine. And it's going to be really interesting to see what happens next month. So what do you do if you're a buyer? What do you do if you're a seller? Well, if you're a seller and you need to sell, you want to aggressively position yourself ahead of your competition right now. You need to have accurate positioning because you don't want to be the home that's going to be left over. So if there's a month of if you need to sell this month, so let's say you need to sell in July, if you don't position yourself ahead of the competition, which is other homes that are similar to yours, buyers will buy the other homes first, which will leave you left over on the market for next month. And if next month sees another average sale price decline, you've just lost yourself probably tens of thousands of dollars. So make sure you're positioning yourself aggressively to get ahead of the decline. I still think there's going to be more decline ahead. So you got to be aggressive. You got to get ahead of that decline. Otherwise, you're just going to be waiting until the bottom market bottoms and then you'll be consumed. But that could cost you probably 20, 50, maybe even 100 grand, depending on what your average sale price is or what your actual home is worth. So don't wait to the bottom. If you need to sell, get ahead of the decline. If you're buying right now, well, there's lots of options for you on the table. You can start negotiating now, which is really cool. So be patient, but don't miss out on those right opportunities because there are motivated sellers out in the marketplace right now that are willing to get ahead of the decline. So make sure you're taking advantage of those. Make sure you're working with someone that can help identify those opportunities for you. Um, if I was a buyer, it looks like a good time to buy right now. And if you can close your home in the next little bit of a future, make sure you're doing it properly. So I'll shoot another video about that. I'll leave that for another video. But just to give you a quick synopsis here, in a declining market, you got to get great advice, right? Because you don't want to be caught purchasing a home up here when the market's declining and then not have your home sold yet. So if you're purchasing here and then you're waiting to sell and now you're not getting this, you're going to potentially have a big equity swing there that was improperly managed. So be very careful, manage the process properly, talk to an expert, make sure you're not throwing money out the window. All right, I hope you enjoyed this market update. I know it was a bit long, but I appreciate your time. Thanks, everybody.